silver would close the gap upward. Something is big with gold. And I almost hate saying it, but something is going, I've been saying something's happening with gold. The US has become a net importer, and massive deliveries, and everyone talking about revaluation and Trump coming out. You mentioned at the onset, his quote was the golden rule of negotiating excess. He who has the gold makes the rules. Thank you. Well, where the heck did that come from? That was on Easter Sunday. He who has the gold makes the rules. This is the golden rule of negotiating success, he says. Well, we're an importer of gold. Scott Bessent, who recently came out and said that we need a new monetary system, a new Bretton Woods, and that will happen probably within the next 4 years, he said, during this administration.
In today's news recap, silver price jumps to near $33 as U.S.-China trade tensions ease. Silver price trades firmly around $33 during North American trading hours on Wednesday. The white metal strengthens as fears of an intense trade war between the United States and China have diminished after President Donald Trump signaled the possibility of a deal with Beijing. Discussions with Beijing are going well, Trump said on Tuesday while addressing reporters at the Oval Office, and showed optimism that both nations will reach a deal. Trump added that tariffs on China would not be as high as 145%, but they wouldn't be zero. Theoretically, easing global economic tensions reduces the appeal of safe haven assets like silver. However, the metal is rising due to its industrial demand. Silver has applications in various industries such as electric vehicles, electronics, power and cables, mining, etc. Financial market participants expect that easing tensions between the world's two largest powerhouses will favor both economies. Meanwhile, the intraday corrective move in the U.S. dollar has also supported the silver price. The U.S. dollar index, which tracks the greenback's value against 6 major currencies, surrenders initial gains and falls back to near 99. The USD index gives up intraday gains, even though Donald Trump has pushed back fears of sacking Federal Reserve Fed Chair Jerome Powell. Still, he is frustrated with Powell for holding interest rates too restrictive. Now we'll show you the best clips of the latest interview, but first, smash the subscribe button, turn on notifications, and check our new Numismatics handbook. Most stackers want to get active, but swapping their metals for dollars isn't an option. There's plenty of opportunities in the overlooked numismatics world. Mastering U.S. coins, key dates, and errors pays off by multiplying your ounces and capitalizing where others aren't paying attention. Get it at goldsilverstacks.com with a whooping 50% off in April.
My understanding that gold would not be tariffed, and I asked my operations, why do we have no gold bars? Virtually none. I mean, we had some, but not a lot. And he was saying that the tariffs for the Swiss bars are too high. Now, I don't know if he's mistaken or not, but that's what he told me, that the bars are being tariffed. Maybe it's because they're not sovereign coins. I don't know. And maybe he's wrong, but as far as I was led to believe, that gold was not going to be tariffed, but maybe it's investable gold or 1 ounce gold bars or whatever it is. I will just simply tell you that maybe it's a result of the tariffs. They're becoming very, very hard to get. It's much easier for me to get sovereign minted coins right now than it is 1 ounce gold bars, which were always the easiest thing in the world to get. But no, other than that, there hasn't been a lot of talk on it. But look, there's something called Triffin's dilemma, which is something that the White House has written about. There was a great piece done by Mike Maloney, and he talks about this. He says the White House acknowledged the fact that Triffin's dilemma basically says if you're the world reserve currency, there is no choice but to run trade deficits. You cannot do enough commerce to make up for the fact that the world needs dollars and more and more and more dollars, and you can't buy enough from these countries to give them enough dollars. And so we have to export dollars. We will always have a trade imbalance. And you have to wonder, does Trump understand this? Does he not understand this? Or does he understand it and he's trying to incentivize this? Could it be a continuation of the too stupid to be stupid that we saw in the previous administration, just on a different hat? In other words, why not extend an olive branch to these countries instead of going more with the stick and threatening with tariffs that are actually sanctions and huge tariffs. These countries, I think, these are the countries, as I've said on your show before, that take our currency for our paper. They take our paper for their goods, rather, and they're the ones who then recycle back into treasuries, which keep interest rates low, which keep the goods that we buy cheap, which keeps our asset prices high, and has enabled us to live like kings. Do we really want to go down that road where no longer are they buying our treasuries or wanting to hold our dollars and moving away from it, which would make asset prices fall, which would make goods much more expensive, and would make our standard of living much lower ultimately? Would that be the onset of a reset? Maybe. I don't know, but someone should explain to him Triffin's dilemma. If not, and look, I voted for Trump and I'd vote for him again, and I'm glad he's here. And I'm not rallying against him, but what I am saying is that you have to wonder what his motivation is, and you would think he would understand something as basic as that. As you are buying mining shares and choose jurisdictions where it's less likely to see that happen. No, there hasn't been much of it, but it wouldn't surprise me whatsoever. I mean, if you are Mexico and you have silver mines, yeah, why not nationalize it? It's probably the most valuable asset you have in the ground. Although I haven't heard much about it, it's always been something that has been spoken of. So, I mean, the only way to defray or minimize that risk would be to buy mining shares in, Canada and the United States, or in regions that have far less chance of not only geopolitical problems, but governments that will realize that we're far better off keeping these assets for ourselves than selling them to people in the United States, et cetera. So, but I will say, as far as mining shares are concerned, I'm quite bullish on them right now, and I think it's a good time to be selling mining shares if you're a company like Sprott that does so, because they're catching a bid. Their all-in sustaining cost is as low as it's ever been, with oil as low as it is and gold as high as it is. They're printing cash for the first time in a very long time, yet the funds haven't caught on yet. I would say that everyone should own some mining shares right now. I would start with the majors and the what are they called? The royalty stocks first.
Royalty and streaming companies,
Yep.
yeah.
And then maybe, if you have that in your portfolio, dabble with some of the juniors in exploration, which are far more speculative. But this is the time to do it. This is the time. If you were ever going to do it, this is the time where gold has led the way. Mining shares haven't done anything, and with their costs as low as they've been, gold up here, oil down here, this is the time to do it. So yeah, I think that people should consider some quality mining shares right now. Just be careful on the jurisdiction that you choose.
In today's news recap, silver price jumps to near $33 as U.S.-China trade tensions ease. Silver price trades firmly around $33 during North American trading hours on Wednesday. The white metal strengthens as fears of an intense trade war between the United States and China have diminished after President Donald Trump signaled the possibility of a deal with Beijing. Discussions with Beijing are going well, Trump said on Tuesday while addressing reporters at the Oval Office, and showed optimism that both nations will reach a deal. Trump added that tariffs on China would not be as high as 145%, but they wouldn't be zero. Theoretically, easing global economic tensions reduces the appeal of safe haven assets like silver. However, the metal is rising due to its industrial demand. Silver has applications in various industries such as electric vehicles, electronics, power and cables, mining, etc. Financial market participants expect that easing tensions between the world's two largest powerhouses will favor both economies. Meanwhile, the intraday corrective move in the U.S. dollar has also supported the silver price. The U.S. dollar index, which tracks the greenback's value against 6 major currencies, surrenders initial gains and falls back to near 99. The USD index gives up intraday gains, even though Donald Trump has pushed back fears of sacking Federal Reserve Fed Chair Jerome Powell. Still, he is frustrated with Powell for holding interest rates too restrictive. Now we'll show you the best clips of the latest interview. Don't forget to like, subscribe, and turn on notifications so you do not miss out our daily recaps. And check goldsilverstacks.com to get your Stacker's Handbook, the ultimate guide to stack gold and silver, packed with strategies to trade the gold-silver ratio and get more ounces and build wealth over time, so you don't have to rely on market commentators to make your investment decisions. Enjoy the episode.
The system would be independent of SWIFT, the US dollar, the euro, and the British pound. So the US, the euro, and the pound, they're on the outs. Russian Foreign Minister Sergei Lavrov emphasized it will be open to non-member nations, accelerating de-dollarization on a global scale. So to me, when you realize that they are now opening it up to countries that are not just BRICS members, this changes everything. It changes the complete and total narrative. Now, all of these countries will be able to trade outside of SWIFT. So any information we are getting regarding how the dollar's dominance on the SWIFT system is so strong ignores the ability or the reality. This stuff won't be counted in SWIFT. These countries will be able to trade with one another using their own ISO 2022 compliant cross-border payment currencies to trade and then settle any discrepancies in gold before the unit settlement token takes place. This is a massive, massive deal. And when you see the commercial or the central banks continue to buy gold at a level the world has never seen, and reshore it, onshore it, it should be a wake-up call to the West. When you see Trump say we're gonna throw these tariffs on you, which aren't tariffs, they're sanctions, it's only reinforcing why these countries are joining, including Vietnam, who's been friendly with the United States, but now is the 44th country to apply and express interest. So this is not something that has gone away, regardless of the fact that I haven't talked about it on your show for a while. I've been very quiet about it. There hasn't been a lot of information, and that, I believe, is done purposefully. But you can see that they are continuing to build this infrastructure, and now opening it up to non-BRICS members is insanely significant. And if you were to say, if China said all transactions on the Belt Road will settle through this new system, not going through the SWIFT, think of what that does to the dollar demand, to the settlement status of the dollar, and ultimately to the reserve status. Think of what it does. The Eurasian or the Shanghai Cooperation in and of itself is a huge swath of human population. You put all of these countries together, along with all of their resources, this is something that should certainly not be underestimated. And I think it's easier for a lot of the pundits out there to blow off what the BRICS are trying to do when it's just the 9 countries. You talk about adding potentially hundreds of countries. There's over 150 countries on the Belt Road. You're talking a whole different ball of wax. I don't care how small they are. The common denominator in all of these other countries, whether it be in the Eurasian Economic Union, whether it be in the Shanghai Cooperation Organization or in the Belt Road, they are all significantly located in strategic areas, both either on land or bordering water, or more relevant, strategic to all of the natural resources they have. So this is a trend that is accelerating, and they don't need the BIS to do it anymore. They're doing it themselves. So stay tuned. I think you will see more and more and more information rear its head on the significance of the BRICS expansion. Something's going on with gold. And, Judy Shelton, Trump told me he's going to issue, she said that on my show. I don't know if she said it on yours, but he's going to issue treasuries backed by gold July 4th, 2026. He told me that, she said. Something's going on with gold. I believe it is quietly being reintegrated, or really reintegrated into the monetary system. No one knows about it yet. Drop a gold coin on the table with some of your friends who don't follow your work done again and see if they can talk to you for 60 seconds about it. They can't. The public isn't aware of it yet. It's the big money, the central banks, the commercial banks, the family offices, the sovereign wealth funds. Okay, they get it. No one else does. Nobody does. And to me, gold is going to go a whole hell of a lot higher, if I had to guess. I really do believe that, higher than people think. And silver is a coiled spring. It's been held down for so long. Who knows what the real price is? But we've always talked about historically silver lags behind gold. That's true. And when it catches up, it's 2 to 5 times the performance in terms of percentage gain. But the gold silver ratio is your timing signal. You go back through history, anytime it gets to 80 to 1, it's time to go heavy into silver anytime. And it's only touched 100 to 1 3 or 4 times in the last 200 years. I mean, literally. And every single time it's got anywhere near, then it shoots right back down, which I would expect silver to greatly outperform percentage wise, according to historical norms, according to geological ratios, according to, I look at China and I talk about this all the time. I've said it on your show 1,000 times. They're the second largest producer in the world. Why are they flying around the world going to Peru and buying doré and concentrate and all around Latin America right from the miners? This disintermediates the acquisition. No one knows how much they're buying. It doesn't affect the price. And if they are the second largest producer, why the hell, if it's not doing anything, why would they fly around and buy concentrate and doré, pay double what the West will, send it back and refine it? Why is Russia buying it for their stockpile? Why has India bought 7, 8, 900 million ounces over the last 5 years? Why? Because they understand what's going on. They're playing the long game. They get it. If it weren't for the naked short positions that have been destroying the prices of gold and silver for all these years, silver would be massively higher if it weren't for the military industrial complex needing silver to make bombs to blow up countries. And then that same military industrial complex, aka BlackRock, who is the primary custodian along with JP Morgan of SLV and GLD, they own the majority of the military contractors. So they blow up the countries with the bombs that they make with cheap silver, and then they get the reconstruction contracts. It's a sweet deal for them. That's why silver has been cheap. That game is coming to an end. The delivery mechanism is what is destroying their ability to manipulate. And if Basel III is as significant as we think it will be coming this July, it is the ability to naked short and lease gold that has enabled them to continue this game of gold and silver suppression. Maybe that's coming to an end.
What do you think of Andy Schectman's call for gold surpassing $4,000? Is he spot on, or do you see things unfolding differently? Do you think we're finally entering that explosive bull market he's been predicting, or could this just be another peak in the cycle? More importantly, are you stacking right now? Are you positioning yourself in physical gold and silver, or exploring mining stocks instead? Let me know your thoughts below. I'm reading every single comment. And remember, stay vigilant. The financial landscape is shifting fast, and opportunities like these don't wait. Now check out this video right here, and I'll see you on the other side.